Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and founder of the Oxen Group, and you can check us out at www.theoxengroup.com. We're a financial analysis and investment ideas research firm. We're located on the web at www.theoxengroup.com. The Oxen Group Nightly is a great way to finish up every day in the market, and let's get started with tonight's Nightly. We'll be looking at our Wednesday market wrap-up, our position in Comerica, our position in GFI Group, other current positions and exits that we looked at today, tomorrow's forecast, and always check out our disclaimer at the end of the video. Well, the market definitely continued to show its volatility today. We were talking with a few clients today, and this market really seems to me to be very sector specific. There's no general trend right now in the market, and this is what happens when we have a very flat market with a lot of volatility. It's actually a very good stock pickers market because what you have is you have sectors that are going to move on different news points. So, like for example, oil. Oil is definitely going to affect like retail on one end and energy companies on another end. We've got news that continues to come out of Japan that's going to affect some of your some of your other energy companies and companies that are connected to Japan. We continue to have different news on China, which is affecting some of our multinationals, some companies that have sort of some impact from China. And then you got your financials; those are going to be impacted by very specific news on that. But none of it's really connected to the entire market. For example, today you saw JPM earnings coming out very strong in the open, and it looked like they were pretty good on the surface. And overall, I do think they are pretty good. We'll get into that in just a second, but JPM's earnings come out, and it looks like the Dow as overall is going to do very well in day, and really overall dropped. However, you saw energy companies did fairly well today, and then tech did very well today, while financials did very bad today, and industrial goods did very poorly today, and staples had a little bit of a pullback as well. So the market is not, there's no general trend right now that I can see, and I think it has to do with some questions that need to be answered during earnings season, and we're going to get into that towards the end of the video when we talk about our forecast about how that general market trend could be fixed. But yeah, we started out the day today with the JP Morgan earnings. They came out better than expected. Revenue was a little bit weak year over year, and there were definitely some sections of the earnings report that sort of spooked some investors. I think really what it is comes down to is that JPM is a market leader, and they did pretty well. They didn't do great, they didn't do bad. It was just sort of, all right, these are decently good earnings. And so if they're decently good and they're supposed to be the best of the best, what are we going to get when we get to Bank of America? What are we going to get when we get our Citigroups, when we get our Wells Fargo? I think Wells Fargo is definitely one of the leaders. Will they be able to perform well? And it's going to be interesting to see how they perform. As we've been saying throughout this entire process through earnings season, our top financial pick, though, is not going to be your money centers, not going to be your large banks, not going to be your investment arms. It's definitely going to be your regional banks. Those companies seem to have the most potential in the financial sector during this earnings season because of they don't have a lot of international exposure, and they're very much exposed to growing markets in the USA. The regions that we like are obviously regions that are connected to things that are doing very well. So what's doing very well? Energy companies. What region would be doing very well? Your Southwest, the South, the central part of the country, and we'll get into one of our positions that sort of plays off that idea. You're also seeing, I think, a rebound in the Southeast as well as the Midwest from some lows. So some companies there in the Midwest, like Fifth Third Bank, Key Bank, Huntington, and then your Southeast, your region, and your Zion. Those are all, I think, also strong plays. I really do think the regionals are the way to go for financials for this earnings season. And I think Friday we get the first look at regionals with Webster Financial, and then Monday we're going to get KeyCorp in the morning. And I think that will really start to bring a little bit more, separate the money centers from the regionals, and I think you're going to get a lot more success out of the regionals. We also had a nice report come out from retail sales. They came in at 0.4% in March. Not as strong as expectations were. They were at 0.5, but still strong. It's good. It was good to see them come in the green, or in the black, excuse me, in March. despite a lot of things that could have put them down. Gasoline prices rising, and you also had cold weather hitting a lot of areas. And overall, once we saw those March retail numbers come out for the companies at the beginning of the month, it definitely allayed some of the fears that the consumer might have gone away, and the consumer is still strong. Month over month, we saw more retail sales than we did in February, and that's really solid to see. That's a positive. Here's a chart of the core retail sales you see month over month. The gain wasn't as big as February to January, 1% gain there, but we're still seeing it up, and it's probably moving back. I would say April's probably going to see pretty much a flat to about a 0.5% gain. But the consumer is doing well. They're spending their money, and I think that that helps some of the market early gains in the market. And you saw that some things connected to retail were pretty positive on the day today. So that kind of goes with that theory of we have a sort of show me what you got sort of market, and that's not a market that anybody really likes because it's very hard to find that general trend. But you got to dig deep and find some of those sectors that look attractive and could look attractive on any given day. So the market dropped out of the gate, continued down, hit down almost to the low of yesterday, and then popped off that low, and we were able to eke out a tiny gain. And overall, it was just sort of one of those days. It was like, man, I thought we were going to have a good day. We thought we were going to have a good day. I thought we were going to have a good day. And overall, in our own positions, we did fairly well. But I really thought, this could be a 100-point rallying day. Just sort of give up or get back everything we lost yesterday. Did not happen. JPM, was not strong enough to really propel the market. But we got a number of earnings coming out tomorrow. And we'll talk a little bit more about that. So, Comerica was our position that we entered this morning. We entered the stock at open on strength. It looked like it was ready for a breakout. This is a stock that technically is right on the breakout, and it just needs that one little push to get it to go. And I thought that this morning those JPM earnings were really going to push it over the edge. And as the market digested those earnings a little bit more, we're not as positive on them. But throughout the day, the stock did drop, but you know what? It showed some great strength. And as we were saying before, this is the largest bank that's headquartered in the South, in Texas. And Texas is definitely one of those states and one of those areas with the best economy right now. You've got energy. Those guys are drilling like none other. They want to get as much out of these high gas or high oil prices as possible. And natural gas and oil are seeing a lot of supply, a lot of price increases, and and energy remains strong. And so these companies are doing a lot of business, and that's good for Comerica. And they're also up in the Michigan area, in the Detroit area. They also have a large following there, and that's another area that's actually seeing a rebound with the automobile sector doing better, and with more jobs coming to that sector. And those are two areas where you see a lot of growth or a lot of sustained growth. And that was we picked up this regional. It's a company that's shown some strength lately, and I'm going to get to the chart in just a second. And it's right above all of its moving averages, and it's right on a price channel breakout. And I'm not going to show you the price channel chart, but if you take a look at a chart that can show you price channels, definitely look at how it's right at that breakout point, and it actually is pointing upwards on the price channel, which is the sign of a breakout. And we may get that breakout tomorrow. If we do not, I still think that this stock is a good stock moving into their earnings on Tuesday, where they're supposed to see a 200% increase in EPS. So here's the chart for Comerica. Now you see the price channel was broken last week. Got an upgrade to $45 from Sternergy, and they really increased well on that. They've got a couple other analysts coming out saying hold, or we have market perform, and price targets are 38, 39, and those have sort of, I think, maybe given a little bit of the tepid increase that we've seen, but the stock is slowly creeping up, and you can see that at 39 it had some resistance today, and that resistance line was not on the chart earlier today, but when it hit 39 and dropped immediately, it showed that there was some resistance there. That is a little bit of a worrisome point for us. We are definitely going to keep that in mind with the way we exit this stock. Definitely probably going to try and take a little bit off when we get back. We're a little bit under neutral right now, down about just about 1%, a little bit under 1%, and we're going to definitely look to probably take a little bit off when we get back to neutral, just to hedge some risk, simply because this market is just so volatile. And then at 39, if we get close to that, we'll probably take a little bit more off, and then hope that we can get this one to break out above 39. And once we get that breakout, the stock could go to 40 easily before earnings. So, but you see, the financials are good, the fundamentals are good. There is definitely a catalyst there for the stock to continue up, and the technicals are very solid. You see, all the moving averages are pointing up. You've got the 50 days starting to point up, the 20 days starting to point up, and then the 200-day are all pointing up. So that's pointing up. Broke its price channel, and it's going to start a new price channel once this stock breaks out. And I would expect that price channel to look like you're going to have these bottoms here. To go there, and it's going to be like this on the bottom, and the top's going to come up and it's going to be there, and so there's going to be a huge price channel right to there, pointing to about 42. So very nice chart. It's a very good looking chart. I like Comerica a lot. And we did see a couple analysts also, a street analyst today said he liked these technicals as well, and definitely a stock that you want to take a look at. We also did a short sell on GFI Group today. GFIG is the stock. This is a stock on the opposite side of things, with the 50-day moving average to 200 and the 20 moving down, and a downward price channel. So this stock is on a downward trend. And this stock, you can tell, is very rangy. It likes to trade in about a 490 to about 460 level. So it's it likes to trade a lot in this range here. It broke out here, but quickly got back into it, and it looks like maybe it's even in a 5 to 460 range at this point. So it's on the way down. And we got into the short sale. We actually made 2% quickly on this one today, but we're still holding half a position there. I like this one as just a sort of a hedge to our buys that we have right now. It's good to hold a short sale just to hedge any risk, just in case you get a big pullback on any day. You have something in your pocket that shows some downward movement. That's what you want. You want stocks that look like they're moving up, that have good momentum, that have that catalyst, that have their moving averages pointing up, that are in a technically looking well. And then you want your stocks that are not as strong fundamentally, don't have any kind of catalyst, have downward pointing technicals, look weak, and you can combine those together. And those are the ones that are that way. Even on up days, they can move down, and even on down days, they're going to move down significantly. And then the ones that have those support lines drawn on a down day like today, they're going to hold those support lines, not break through them, and then move up on the good days. And so that's the kind of trading portfolio you want to be able to get together. And so some of the other current positions we made 1% on Apple today, and we're looking for our next target at 340. This stock showed great strength at the close today, showing a lot of strength moving into earnings. So this was, I think, a very tremendous pickup for us. I could see this stock going to 340, maybe even tomorrow with this sort of volume and strength we saw at the end of the day. If we get a real good day tomorrow, this could be 340 definitely by the end of the week. And then moving into next week, I would look at 345 as the next target. So definitely some potential there. We also made first 1% on First Solar. There's a lot of strong fundamentals in the solar sector right now. They've got Germany coming out today saying they may not even cap the solar industry at all now, which is huge for solar. Italy has still not broken any news about their subsidies, but the Congress also extended some loans for renewable energy. We're not cut out of the budget deal, and China continues to talk about how they're going to maybe double their solar energy. And anytime you have any talk about nuclear energy, it's a renewable source that is basically a hedge to nuclear, is solar. And so I think these stocks, they're very undervalued and well positioned fundamentally to continue up. So we continue to hold a position for solar. We exited our short sale on DR Horton this morning. We made a very small gain on that overall. It was just a nice hedge yesterday as the market was tanking.